Hey guys, welcome back to EK TV, and we're back here in Delta Summit where it all begun. This time last year was our first time as EK TV, and we interviewed some of the biggest names. And I've got a great name for us today for our first interview. We've got Nicholas Merten, the founder of DataDash. Welcome to the show.
Hey Aaron, it's a pleasure to be here, man. Thank you.
Awesome. So, we're here in Malta for the fourth time now, and let's look at the markets, right? We saw a major dip about a week ago. I think it dropped about 2,000, I think, to 8,000. Where do you think we are right now in the cycle? I mean, everyone was thinking that Bakkt was going to be a major boon for the prices, but that didn't seem to actually. In fact, it was a negative movement. So, really interested to get your take on where we are right now and how you see things moving forward.
So the major thing that I've been looking at right now is understanding what's really going to drive Bitcoin. A lot of people are focusing on institutional on-ramps like Bakkt, driving it. But the thing is, that's really just the way that institutions and retail investors can engage with crypto markets. There really needs to be a catalyst that drives markets further. And one thing that we've really talked about on our channel, for a while it wasn't as popular, now it's really, I think, been growing on a lot of people in the crypto space, is talking about the macro perspective. So originally I'm a macro trader, so I've traded financial markets like equities, commodities, the bond market, things of that sort. And I've understood how cryptocurrency plays a role as a new asset class, specifically Bitcoin in the sense of a store of value as a hedge. And once you understand the principles of Bitcoin and what makes it an ultimate store of value, you can see how it serves as an ultimate hedge against traditional bond markets. We're seeing right now that there's negative yielding bonds in European and Asian markets that total $17 trillion. You're seeing equities as well topping out right now across most countries and their current equity markets. So you're seeing an incentive for capital to move out of stocks and to move into commodities and hedging assets like Bitcoin. So I think if we understand the fundamental principles of Bitcoin, we can start to understand when eventually over time as the macro environment changes, how price is going to react to that. And I think we're entering into the next cycle here, the next 4-year cycle for cryptocurrencies. My target is for sometime in Q1 to reach back to 20,000. And then after that, we're going to see parabolic new highs of around 80 to 100,000 at a minimum, sometimes towards 2021.
Okay, so you're very bullish by the sounds of it. But obviously, given that what you've just said, are you saying that we need to see some kind of, financial disaster across the world to see Bitcoin finally hit those 6 figures?
Yeah, absolutely. I don't think, Bitcoin can continue to improve, and we can also build more ramps that are legally compliant and things of that sort to allow institutions, for example, like pension fund managers. An ETF would help pension fund managers and a lot of institutional investors get an on-ramp into the crypto world. But these will come over time as the demand arrives. Right now, there's not as much of a demand because equity markets are still relatively towards their highs. There's not as much push towards this new speculative asset class until there's going to be a demand for it. So I think that's going to arrive from a lot of capital outflows, and that capital not being able to flow as fluidly as it is. For example, as I was mentioning, pension funds can't invest in Bitcoin right now. And with that barrier, you have a lot of capital that's locked up, around 41 to $42 trillion that's locked up in pension funds, so retirement portfolios, things of that sort. When you create an ETF, that's going to allow a lot of capital to flow, but it's not the ETF alone that's going to do that. If we had one today, it would have nowhere near the effect unless the bond market was imploding, so fixed income markets, or if equities were starting to implode as well. So I think it's a catalyst in that case that's going to really cause crypto to move higher.
But do you really think that the infrastructure is ready for that level of investment? I know there's lots of custody solutions coming in, which is giving fund managers more trust to actually put their wealth into crypto. But do you you said that you're expecting near enough all-time highs in Q1. Do you think that we still got some way to go before we can actually take that amount of money to come into the space?
Yeah, so the solutions I've seen for institutional custodianship has been really impressive, I have to be fair. But I still have a very interesting view where, again, we were talking about an ETF and all these things, which I think will bring in a lot of capital. So in that case, there are some great custodial solutions. On-chain custodian we did an interview with a while back. But outside of that, I think for the average retail users are going to actually manage their own funds. That's been a big issue right now. It's a question of how do you make it simple. But I think self-custodialship, due to the risk of having all funds in a centralized location, is not going to be the standard. We're not going to have one big custodian, Coinbase. And I think a lot of other exchanges are realizing this with decentralized exchanges and better wallets coming to the forefront. So we're working on a startup right now that's related to the DeFi movement. And we're focused on people becoming their own banks, helping them be managers of their own funds and doing it in a simple manner. I think once you can do that, and once you can get prominent custodial solutions, which we are seeing right now in 2019, going into 2020, I think that's going to be a huge step forward for regulatory products to come out and for price to increase.
Awesome. Okay, so you mentioned a lot about Bitcoin there and the Bitcoin price, and obviously everyone's been kind of waiting for altcoin season, but altcoin season hasn't come. What's your outlook on altcoins? Do you think that Bitcoin is going to fly and altcoins are still going to bleed, or do you think that eventually that money is going to flow down like it did in the past?
Yeah, so I'm actually quite bullish on altcoins right now. There's obviously a lot of projects that aren't going to come back. That's one thing I've really tried to propagate. Don't go for projects that are losing right now or that are down 99%. A discount isn't always a discount, or what it appears as. Most cryptocurrencies that I'm actually interested in the altcoin space are ones that have been outperforming Bitcoin. So Chainlink is one that's fixing the Oracle solution. I've been talking about Ravencoin, which is really a platform for not only securitized tokens, but really a digital asset platform. And then also as well, you've got Basic Attention Token, which has the Brave browser, has real users. So I think in order to outpace Bitcoin, you're really going to have to provide a product that's unique in some sense. Ethereum and I think a few of the major market leaders will outpace Bitcoin in the next cycle. And the reason is because they're smaller cap. It's kind of like silver to gold. Silver usually moves at higher rates than gold during bull runs in commodities. So there's the speculative aspect and the fact that there's more market value to gain. But along with that, there's a lot of platforms like Ethereum with the DeFi movement or decentralized finance movement, where there's a lot of interesting applications. We went from, in 2017, having a ton of speculation in ICOs, to now going into a movement where we're seeing real financial applications, real financial inclusion coming into the space. And I think Ethereum's kind of finding that that's really going to be the killer application for it as a network. And I hope other networks follow suit as well. I think Bitcoin will push for DeFi as well, but you need to have that ability for developers to really build on top of it. So that's what's getting me excited at the moment. It does make me believe that there are at least a few killer altcoins that will do well. Some of them I mentioned here.
Yeah, awesome. Okay, and just moving slightly away from that conversation onto your, epic YouTube channel that you have. So yeah, obviously, Nicholas Merten, aka DataDash, the largest YouTube channel in cryptocurrency and blockchain space, I believe. Where do you think the future lies for influencers like yourself? Do you eventually think that you will potentially outgrow YouTube? Do you think you'll see yourself on different channels? I know that speaking to my YouTube buddies, there was a purge maybe 6 to 12 months ago, and lots of people lost loads of followers, and obviously people are talking about how centralized YouTube actually is itself. And I know there's projects like Contentos, a number of other projects that are creating decentralized versions of YouTube. Would you ever see yourself moving over to those platforms?
Yeah, so in the sense of alternative platforms, I think that's an important question. So we upload on 3Speak, which is basically a Steemit video platform, Steam platform for video uploading. But it's really awesome. I love platforms like that. I'm always eager to support things that are against censorship. I think which has been a big issue on YouTube. People get demonetized for the simplest things. Like if you use keywords in your titles. For a while, I was actually getting demonetized in my videos, and YouTube didn't explain to me why it was. So yeah, and again, it has to do with the lingo we were using in crypto and stuff, and it was getting completely misinterpreted, and I had no way of knowing. And it was, killing my source income for doing this full time. So yeah, 100% agree. I'm trying to find alternative platforms for my own self-interest, but also to get the word out to other platforms who are interested. And in the sense of branching off, what I really love is I think I'm going to remain independent for a while. We've got a very low team. It's just 2 of us, who run the channel and stuff. I do all the content side and everything. And basically, the major aspect, the reason I like that is because I get to kind of be my own boss in a sense. I talk about what I want to talk about. If I don't feel like there's something I want to talk about, I don't have to, cover something that my boss or a group or organization wants me to put myself up to a mic to and talk about. And I think there's a sense of freedom and also a sense of quality that comes from that, because everything I speak about, from the right calls that I make to the wrong calls, I'm honest about it. I talk about the topics that interest me. And you were talking about the purge in YouTube and stuff. Channels. I've always talked, a lot of people have asked, don't you have a responsibility in a sense? Don't you feel that urgency of responsibility to talk about good projects and also to make sure to do your due diligence? And I say 100%, because if I don't, there's a ton of other YouTubers out there. I eventually will fall off the map if I don't stick to my guns and stick to my principles of morality and real due diligence and research. And we've had waves of YouTubers come. We had the BitConnect craze, which were made up of some of the biggest YouTubers. They're gone now. They're not in the space anymore. We also had a lot of the ICO hype types, who again just propagated every single ICO. Many of them received crazy amounts of payments and stuff. They're gone now. So now what you have is a lot of quality YouTubers like Ivan on Tech, you have Box Mining, Blockchain Brad, Alex from Nuggets News. all these people that I've gotten to talk to, as well as other influencers on other platforms. You guys have done great work as well. Yeah, no.
EAK TV as well. Yeah.
No, EAK TV. And that's the thing is, I think you're really seeing an improvement of the quality of the space right now. So I'm 100% happy I'm privileged to still be here doing what I'm doing. And I think that, again, there's that continued growth of filtering as the space continues to expand, because people expect a higher quality of media.
Yeah. Okay, cool. So obviously, you release a video every single day, I believe. And so you see what drives views, you see what drives clicks, you see what drives comments. Right now, where we're at compared to the bull run back in 2017, what are you seeing the differences in terms of the kind of content that's actually driving more views than previously?
Yeah, so whereas, as I was kind of hinting towards earlier, the issue that I saw is that it was kind of standard in both written media and also in video media, that if you didn't mention price or if you didn't mention, parabolic or like terms like that, speculative terms, then no one was really attracted to the video. But what I've really been focusing on, again, is explaining, I think people really love the substance of a much more kind of mid, I'm trying to think of the right term for it. Basically, a much more neutral view on things, and really having, instead of a biased view on crypto, understanding principally why crypto could go to these levels and what it is as an asset class. And I think price is a huge component. In my opinion, I think there's a great investment opportunity in the crypto markets. I'm most exposed to crypto out of any asset class. But the reason for that is because I fundamentally understand what this is going to mean for the financial sector. If you're just speculating on Bitcoin, it's the same as if I was to just randomly pick a stock, and that's never a good idea. You want to understand principally what this market means for maybe not myself, but what it means for a global audience, so people who are underbanked, who don't have access to credit markets or financial services, who are under oppressive governments where they can't transact freely. That's where it really comes in and valuable. And I think there's trillions of dollars in market potential, which leads us to these parabolic numbers that we talk about, like 80,000 or 100,000 for Bitcoin. But again, I think the space needs to continue to improve. We're not built yet for a global audience, which is why we're at less than 1% global adoption for cryptocurrencies, even at these values.
Yeah, okay, cool. So, I know you've mentioned a few projects that you like there. Maybe that was more in terms of like price, but in terms of like projects that are actually moving the space forward, especially you mentioned the Unbanked, the actual social impact projects. Which projects do you think are not getting the amount of attention that they deserve based on your research?
DeFi. Yeah. So DeFi is, I'll give this in the sense of, for example, consensus. The biggest topic there that was kind of the focus point was the decentralized finance movement. So they had a MakerDAO and everything there. There's a lot of interesting companies, MakerDAO, Compound, DYDX, Synthetics, all kinds of companies that are either working in decentralized stablecoins that are censorship resistant and crypto collateralized, or lending platforms. And I think the lending platform has really been the biggest interest for me, because when I take a look at the traditional banking sector, a big problem that I always saw was that in the United States, for example, I don't know how it is in the UK or in Europe and everything. I guess I'm assuming it's negative now with a lot of the negative rates. But in the United States, for a savings account, you're getting paid 0.09% interest annually on an average savings account. Yeah. It's a fraction of 9/100ths of a percentage point. So with a lot of these projects like Compound, you can now basically lend out your crypto positions, your stable coins. So the equivalent of like if you had $1 stablecoin, it's like having $1 in a bank account. You can lend that out and earn anywhere from 7 to 9% interest. And that's absolutely game changing. That's more than 100 times the rate of what you're getting in your average savings account. Yeah.
And you don't even have to be exposed to the volatility, because you can have like USDC or a stablecoin, right? So you could just convert all your money into a stablecoin and just make, what was it, 8%, 9%? I know Celsius are obviously one of the best ones, I believe, out there. Alex is a great guy. I think actually everyone says that. When they say Celsius, it's always like, Alex is a great guy afterwards. He's such a good thought leader in the space. I'm not actually lending out any money at the moment. I haven't done my research on like whether I really trust them with my money, and that's something that I need to work out myself. Obviously right now, like all of our money is like on a ledger, safe away. Obviously, I would actually like to start lending more, but like I said, I'm just concerned. Like, I'm not sure if like whether they have like insurance, and if they do, something I read recently was I'm not going to mention the project, but they've got like $100 million insurance fund. But that's like, that doesn't actually cover you for your full amount. Like you could, yeah, it's like a percentage, right?
So that's good. Well, first off, you were talking about Alex earlier. Alex Majensky is a great guy. He created, I'd hate to shill him, but he's such a nice guy. Alex Majensky created a voice over internet protocol, which is basically what you use for Skype, and now he's getting involved in the crypto space. So I think it's really telling he's working in this kind of DeFi space. Now, on your question you were talking about earlier about like insurance, there's really kind of two types of lending pools that you can lend money to, because I've really looked for this for a long time, and finally people are building them. So there's like, it's kind of CeFi and DeFi. So Celsius Network would be something that's more kind of centralized finance, because they're a custodian of the funds, and they do have insurance. They use BitGo custodial technology to basically store funds. And the thing is about Celsius is they're actually deterministic of like who gets to borrow on the other side. But the nice thing about it is that each loan is completely collateralized. So the major use case right now has been margin lending for margin trading. So in that case, if I, for example, want to get more exposure to a certain asset, I have to put an equal amount of collateral to whatever I'm borrowing. So it's actually much safer than having money in a traditional savings account, because you have the same risk in that sense of someone owning the funds, like managing it, which is Celsius in this case. But if they don't pay back the loan as the borrower, then they lose their collateral. So it's equalized in that sense. You have coverage in that case. In the sense of more DeFi-related projects like Compound and DYDX, what they do is they actually have a smart contract on the Ethereum blockchain that you actually send funds to, and anyone can borrow, but it's the same principle. They're putting up an equal amount of collateral, if not more, in order to be able to margin trade in a sense. So it's a great way to democratize a very high interest earning market for people who are just saving their money, and it allows anyone to margin trade in a sense. And you don't need to go through extensive KYC, you don't have to go through a third party, it's all happening through an autonomous smart contract. So the only thing you have to worry about there is the code itself. If it's audited, if there's any kind of issues where someone, like the DAO for example, where there was a huge issue in the smart contract, you just have to make sure that there's no bugs in the contract. Outside of that though, it works. And a good way to measure security, of course something can always go wrong, but the security of the smart contract becomes more safe as you have a larger amount of funds and the longer period of time that's been around, because there's more of an incentive for someone who knows about a bug to utilize that bug and actually steal those funds early on. So it's a really good telling when the Compound has like, I think anywhere from $80 to $100 million right now. Celsius has pulled over billion AUM right now. I mean, they've had some serious success. But I think that's what really excites me right now, and hopefully scaling that market to tens, if not hundreds of billions of dollars to trillions in the future.
Awesome. Okay, nice. So, I mean, I know that you travel the world speaking at many conferences, and you've seen adoption, in Malta. I know you're in Asia soon, and I know you're constantly traveling. So, obviously, you mentioned that you're going to launch a new project potentially soon. Like, which kind of jurisdictions are you looking at as areas that you think would be regulatory compliant and would be the best environment for you and your new projects?
Yeah, so for our company, we're actually lucky. Our regulatory constraints actually allow us to still be in the US as of now. So we're actually, we're going to register a Delaware C Corp, which is really nice. It's standard for most tech startups. But, in the sense of the broader picture, we're plugging a lot of existing applications in the crypto space. And I think some of the best areas have been obviously Malta, but as well as that Singapore. I think Singapore is kind of an underrated spot. That's where a lot of the decentralized exchanges are based out of.